You might think reading 125 books on financial markets is the secret to getting rich. The reality is, most people who try this end up with nothing but a heavy bookshelf and a drained bank account. Books are incredibly useful, but they only provide vocabulary. They give you the raw data and the theories. But wisdom, the actual ability to extract money from the market consistently, is something only the market can teach you through daily, brutal feedback. This creates a major trap for beginners. Traders end up wasting hundreds of hours consuming the completely wrong material for their current stage of development. We must filter this library into a diagnostic framework targeting 3 specific bottlenecks: technical, psychological, and character. If you apply the wrong fix, like mastering psychology before knowing what a candlestick is, your system breaks down. You'll blow your capital without the right foundation. Becoming profitable doesn't require consuming the highest volume of pages. It requires diagnosing exactly where you are failing right now and applying the one specific framework needed to clear that block. We start with the absolute beginner. This is the trader who lacks basic market language and is usually hunting for a flawless, holy grail strategy that never loses. At this stage, your only job is exposure. You need to absorb fundamental terminology like leverage, pullbacks, and price action just to understand the environment you are walking into. You also need to study how different professionals operate. Seeing systematic traders, trend followers, and price action purists breaks the illusion that there is a single correct way to trade. The goal here is simple survival. You acquire the vocabulary to read the charts and realize that long-term survival relies on strict discipline, not raw intelligence. Look at this matrix building on screen. For Phase 1, your input is vocabulary and your outcome is market context. The trade-off. These books won't teach you how to trade profitably. You are entirely responsible for building the actual system yourself. In this foundation phase, discovering how professionals manage their risk and routines is far more valuable than trying to blindly copy the specific assets they trade. Once you have a system, you enter Phase 2, the inconsistent intermediate. This trader knows the terminology and has a strategy, yet they consistently lose money because of their own behavioral errors. This is where the emotional breakdowns happen. You revenge trade after a loss. You overtrade out of boredom. You move your stop loss to avoid being wrong. You freeze when it's time to pull the trigger. To advance past this, you have to permanently abandon the search for perfect entries. Your focus must shift entirely toward managing risk. This phase requires unglamorous, tedious work. You have to rigorously journal every trade, calculate your risk multiples, and install strict guardrails to protect your capital from your own emotional reactions. You have to become an excellent loser. You learn to take planned, calculated losses without taking them personally, accepting that being wrong is a standard cost of doing business. By doing this, you build a resilient process. You ensure your mathematical edge can actually survive long enough to play out across hundreds of trades. As the matrix expands, we see the pivot phase: input, risk management, and guardrails, leading to edge survival. The trade-off is a complete surrender of ego. You must give up the desire to be right on every trade for objective data review. If you are inconsistent, your bottleneck is almost certainly not technical. Your strategy is likely fine. What you lack is emotional bandwidth and self-control. Finally, we reach the profitable scaler. These traders make money consistently, but they are often stressed, burning out, or completely losing their sense of self to their own ambition. The danger is that ambition without wisdom will consume you. You can conquer the market, only to completely lose your own identity in the process. To survive this phase, you must cultivate emotional detachment from money. You have to adopt a generational timeframe, prioritizing long-term discipline over immediate gratification. The expected outcome is wealth that is actually sustainable, money that doesn't destroy your character, your physical health, or your peace of mind. Looking at our final matrix row, the input for Phase 3 is character building, and the outcome is sustainable wealth. The trade-off? You have to spend precious time away from the charts. For highly ambitious people, this feels deeply uncomfortable. Accumulating capital is a mechanical skill. Keeping it demands the specific character traits of responsibility and long-term restraint. Ultimately, your profit and loss statement is just a mirror. It reflects your personal character and your level of discipline straight back at you. To figure out exactly where you are failing, we can look at this diagnostic scorecard. You need to map your current struggles to one of these 3 phases: If you are constantly hopping from one strategy to the next, your bottleneck is foundational. You need to stop looking for shortcuts and focus strictly on learning the language of the market. If you have winning streaks but continually blow your account on a single bad day, your bottleneck is psychological. Stop looking for new indicators and learn how to take a loss properly. And if you are profitable but completely miserable, your bottleneck is character. Step away from the screens and define what true freedom looks like for you before the market consumes you entirely. Passive reading is useless without execution. You need to pick the exact book for your specific bottleneck, extract the guardrails you need, and immediately apply them to your trading. A book can plant the seed of a different life, but it is only the daily, unforgiving feedback of the live market that will grow that knowledge into wisdom.